Hi, everybody. It's a great pleasure to be here at the Boğaziçi University Finance Summit. And I'd like to thank the university for inviting me to this important event, and also especially to Vedat Akgiray. And we are having very interesting presentations today. And what I want to do in my presentation is to give you the global regulatory landscape, which will help you understand a little bit regulatory implications of the recent fintech phenomenon and the digitalization concept. So I know regulation is a bit boring concept. It's intrinsically like that. I'll try to be a little bit interested in emerging issues. So for those who are not familiar with IOSCO, let me make a brief introduction. We are the global standard setter for capital markets. And it's a big network of securities regulators and central banks from all around the world, as well as industry associations and some of the most important international organizations like the World Bank, IMF, and European Commission. What we do is we make basically the standards for global capital markets, and all our membership comply with those regulations and rules. And we have three core objectives: protect investors, ensuring market integrity, and reducing systemic risk. And we are also a very important player in the global regulatory reform. And some of the projects that we carry out come directly from the G20 leaders. So our membership regulates 95% of the global capital markets, which is almost the whole world, apart from a couple of emerging market jurisdictions. We also have a very big growth and emerging markets committee, which actually Vedat used to chair for some years very successfully, and our principles and standards are accepted as the global benchmark when it comes to capital market regulation. So on the screen here you see like a definition of digitalization, and this is a new big phenomenon which is shaking up traditional financial market players and activities and the way products are offered to, especially to retail investors. It's not a new thing, but its recent scale, breadth, and speed is making it really the inevitable future. But of course, this comes with a lot of challenges and new technologies, as we call fintech, which I will talk in some of the upcoming slides. And for regulators, the key question here becomes striking that fine balance between encouraging innovation and making sure that investors are protected and also financial stability is ensured. I talked about the IOSCO principles, and this is exactly what we are trying to address here. And some call this digitalization as the fourth industrial revolution, or some of them call it as digital disruption. I don't want to use disruption because it has a negative connotation, but it has some truth in it, because by using these technologies, for example, now I'm at my summer house here in Bodrum, and from a basement in Bodrum, I can reach out to any investor in the world. So that's what makes these technologies unique. So, and I said, it's going to be the inevitable future. Let me give one example from IOSCO board. And if you look at our board agenda, 5 years ago, we were mainly talking about traditional concepts like OTC derivatives or asset managers or central clearing. But if you look at our agenda today, you will see that almost half of the topics on the agenda are mainly fintech related issues or technology related issues like artificial intelligence, machine learning, DLT technologies, cybersecurities, and all those issues. As I said, this is accepted to be the inevitable future. And as I said, there's a huge potential for increased productivity, reduction of costs for financial transactions, and more importantly, financial inclusion, which is a big need globally, especially for emerging markets and for those populations that are underserved. It brings a lot of market efficiency, but there are also a lot of risks, as you see in the slide. And I will put financial stability aside for a moment. That is probably the least concern for the moment, and our main focus is on investor protection and market integrity. But you see a wide range of risks emanating from this new fintech services or new types of players. As I mentioned, this is really the core objective. How can we encourage innovation without hampering it or stifling it, while at the same time ensuring investor protection, market integrity, and financial stability? So investor protection, as I said, sorry, we jumped one slide. Investor protection, as I said, this turns out to be a bigger challenge than the others, as I mentioned, because now we are facing a new ecosystem of new players and new product offerings. And when that is the case, the traditional regulatory concepts or enforcement may not work very well. That is perhaps why the main challenge comes from these fintech technologies. The way they are offered, mostly, for example, on a cross-border basis, through the use of internet, online product offerings, and mostly from these light touch jurisdictions like exotic islands in the Caribbean, or those jurisdictions which do not regulate certain type of market players and activities. So it comes up with very specific challenges. And also another big problem here is really making that distinction between what is legal and what is not legal. And we call them gray areas, or legal but harmful conduct. And some of the activities of these new firms, like, for example, binary options firms, sometimes they may not be illegal exactly, but there is something wrong with them. They may not fit well with within the conduct expectations. And in such cases, that usually happens for example, within the firms at the trading desk level, where the traders need some guidance. And that is what, as global standard setters and regulators, what we are trying to achieve as well, together with the self-regulatory organizations, to provide guidance on these issues to firms to make it clearer what is acceptable and what not. And one big issue is the offering of complex retail OTC products to retail consumers. And these products are like binary options, contracts for difference, or rolling spot FX kind of products, which are also very popular, to my information, in Turkey as well. And we have seen these people targeting vulnerable investors, especially retired people, with very heavy advertising from those light touch jurisdictions, and most of the time using celebrities or football teams or famous people, and retail investors today lost a lot of substantial amount of money and sometimes their whole life savings. So the offering of these complex products on a cross-border and digital basis continues to be a challenge, and we try to address this issue as IOSCO. The other big discussion we are having as regulators is responsibility and liability in a technological environment. If something goes wrong, are we going to find a machine? Or you're not going to be able to find the machine to jail or find the machine. So who's going to be responsible in this case? Is it going to be the director or CEO of the firm, or is it going to be the head of department, or more likely, is it going to be the person who is designing the software? So traditional concepts of responsibility and liability also become very challenging when it comes to fintech and responsibility in a technological environment. So we had various IOSCO initiatives to address some of these challenges that I mentioned. I mentioned our work on retail OTC leverage products to address the binary options problem. And then we did a lot of work about social media and robo-advice, for example. And what we see today is also a lot of disintermediation by these fintech companies. For example, robo-advisors are disintermediating traditional investment advisors, or sometimes we see, for example, crowdfunding platforms like peer-to-peer lending platforms disintermediating traditional lenders and banks, equity crowdfunding platforms disintermediating traditional exchanges. So this phenomenon goes on, and we are trying to look into all of those issues, like social media, offering of these products on a digital basis, retail OTC leverage products, know your customer rules, suitability rules, point of sale disclosure, all of which are to cope with this investor protection challenges. And here's a very interesting slide which I wanted to show. This is a binary option advertisement. It's quite funny, actually. They always say that the actor should not really outshade the product itself, but in this one they're using Paris Hilton, and you see like the comments on the side, like gorgeous, beautiful, and people are ready to invest in these cryptos. So this is the way they target retail investors with heavy advertising. Most of the time, use of celebrities or fake, for example, softwares. You are actually making some transactions on your screen, and you seem to be making gains, but in reality, your money is already transferred somewhere in the Cayman Islands or one of those small light touch jurisdictions. And enforcement is a big challenge. Again, as I said, we are facing a new ecosystem of market players and new methods of offerings, and it's very difficult to detect these firms. They're changing their internet domains all the time and their names. They're closing and opening new accounts, and most of the time, of course, these products are offered from cross-border jurisdictions. And even if the local regulator reaches out to the cross-border regulator and detects the firm, putting an enforcement action in place becomes really challenging because of the lack of regulatory hook. But regulators are not standing still. We are also trying to use innovative ways of coping with these challenges. For example, what we did, our Canadian regulator colleagues had a very interesting initiative, for example, to avoid offering of these risky products to vulnerable investors, where they communicated with credit card companies like MasterCard or Visa, or big social media giants like Facebook, where all these illegal firms put their ads. And then when these firms saw that retail investors are being damaged, then they stop these ads. For example, in the case of credit card companies, in those transactions, there is usually involvement of a credit card to make the money transfer. And then when those, I would call them as the aorta of cash flows is cut, and then these harmful behaviors to a great extent are to a great extent avoided. So what is fintech? Now we'll come to the concept of fintech. Fintech is digitalization is a broader concept, and fintech, in fact, these are innovative business models and technologies that have a huge potential to transform the financial services industry. As I said, there's a lot of disintermediation going on, and we talked about the challenges that these firms bring. And if you look at the global landscape today, this is a work we have done within our fintech network of IOSCO, and we divided fintech into 8 broad categories, which include payments, which is the key main category, and then we have insurance, of course, financial planning, lending, crowdfunding, blockchain and DLT, trading and investments, data and analytics, and of course cybersecurity. And this slide is quite important, the regulatory approaches to fintech. Today, we see a wide range of approaches from regulators from all around the globe. These span from lighter touch moral suasion to more stricter approaches like until prohibition. And some jurisdictions they target specific entities, and most of the jurisdictions they use their existing frameworks. But sometimes we see that some of the jurisdictions are using their or coming up with a specifically dedicated regulation to fintech concepts, like in Japan, for example, which is one of the pioneers of fintech, globally speaking. And then some jurisdictions, like we have seen in China or Vietnam, they prohibit, they ban the products and offerings when they see there's a potential for investor harm. And I want to spend some time on this slide because this one is quite important. It's basically talking about different fintech related areas and technologies. The first one is distributed ledger technologies. Some people say that we should take this technology as seriously as we should have taken internet in the early 90s, and it's hailed as the new revolutionary technology. It has very widespread implications in different industries, not only in the financial sector. But in my view, its main benefit in the financial sector or in the securities area would be in the post-trading space. What does this mean? When I say post-trade space, I'm talking about clearing and settlement. In clearing and settlement, we have this traditional concept, what we call as delivery versus payment. So basically, when you purchase the security, there is a two-way direction. The money goes in one way, and then the securities are delivered in the opposite way. But behind the scenes, during this transaction, there are a lot of calculations. There are a lot of procedures that take place in a few days' time. That's why we have that T+1, 2, 3 concept. If we have the distributed ledger technology or blockchain, if we can use this efficiently, that T+2 or 3 days will almost become spontaneously. And that's very revolutionary because during this time period between the transaction and the settlement, there's always a credit risk component. That's why counterparties post collateral to each other. So if you can use a blockchain and do not post this collateral, thanks to blockchain, then you will have enormous cost savings because you can use that collateral, which is mostly in the form of cash, in other productive areas like lending. So that is why DLT is very revolutionary. Having said this, of course, there are a lot of challenges with the DLT, which I'm sure you're familiar with. People talk about the energy consumption, which is equal to, for example, annual energy consumption of the country of Ireland, only for Bitcoin, for example, in this case. And then people talk about its irreversibility, and there are questions as to whether blockchain is really fail-safe. And we are talking about quantum computing recently, and that's the next revolutionary thing in the computers. We'll leave that binary system to quantum computers, and some people, experts, say that there's a probability that these computers may break into blockchain. So there are lots of discussions on this issue. And the second important topic is artificial intelligence and machine learning. We are also doing a lot of work on this as IOSCO. We have a current project where we are looking this artificial intelligence and machine learning from the perspective of broker dealers, market intermediaries, and asset managers. And our main focus is on the ethical concern. So there are a lot of issues here. Firms who are using these technologies, for example, they have to test them before they use. There should be responsibility within firms. So if something, again, goes wrong, who's going to be responsible? The same question that I mentioned before. And also there's a disclosure element. And when firms are using the artificial intelligence, they should make disclosure to the investors that they're using these technologies and how they're using these technologies. And there are also a lot of issues related to data quality. So at the end of the day, artificial intelligence and machine learning, especially in AI, what the algorithm does is it basically clusters raw data and then makes some extractions from that and then starts learning. And there's this self-learning process. And if the data which is fed into that the system is not a good quality data, and there can be really negative consequences, as we have seen, for example, in credit lendings, there was racial discrimination, or sometimes investors lost a lot of money because of wrong orders that the algorithm has decided. And there's also there is an ethical aspect, as I said, and this technology should be used to the benefit of investors. So the key question is does it really make investments and life for investors better? So that should be the key criterion when considering the use of these technologies. So ICOs is another big phenomenon, or it used to be a big phenomenon, I would say. It was a very hot topic 2 or 3 years ago. Now we see a little bit of it's calming down. The same thing had happened to crowdfunding 6 or 7 years ago. This is probably a little bit due to the COVID-19 situation, and the key focus, especially regulatory focus, has been a bit distracted towards there. But these, initial coin offerings and the token concept has become very important, especially as regulators. We had a lot of discussions about the regulatory labeling and how the coins that are issued at the end of the process qualify in a legal sense. So I personally have identified 16 different potential labelings depending on the local jurisdiction. For example, these coins can be a security, they can be a commodity, they can be a collective investment scheme, they can be a deposit. So depending on the legal jurisdiction and the legal framework. But even that is not enough, because each ICO offering requires a case-by-case analysis in this case. And some jurisdictions like the SEC, they already have a test they call the Hovey test, which has been existent for 75 years. They're using different criteria to determine whether a token qualifies as a security or other types of financial instrument. But when we come to ICOs, the key concern again is, as we have experienced, there is a lot of fraud in this area. I have seen examples of things like Jesus coin, for example. People are selling Jesus coin with the promise of faster connection with the Godson to people, and people really invest in such things. So there's a lot of fraud going, especially targeting the vulnerable investor community. And because of that reason, as IOSCO, we have issued an important public statement, and our member regulators from all around the world, almost everyone has issued warning statements about ICOs. So that again, there's a very big retail investor protection issue here. But of course, this is not to tarnish the technology, because it has a lot of benefits. I mean, it also enables fundraising, especially for SMEs, for those who are at the for those firms who are at the initial phase of stage of their life cycle. It is a very innovative, cheap and fast way of raising money, and it's a bit similar to IPOs in this context, although there are also substantial differences. Like in ICOs, we use, for example, DLT, and instead of prospectus, what we use is the thing that we call as white paper. And again, you know, it is done in a very much faster way without going through the burdensome regulatory procedure. Cyber resilience is another very important thing. If you ask any firm today or any regulator today, what is the top risk? They will come up with this. It will be in top one or top two, I can guarantee you. And there are concerns. We have seen very important big scale incidents, even targeting central banks or governments or crypto trading exchanges, where investors lost a lot of money, and there was substantial economic harm, especially to firms. So firms are making a lot of effort and increasing their budgets to respond to this, as regulators as well, increasing their expenditure for cyber security and their budgets and spendings for cyber security and cyber resilience. So if you look at the global standards today, we see three key sets of principles or standards in cybersecurity, one of which is our principles, together with CPMI, Committee on Payment and Market Infrastructures. These standards we had designed in 2017, which were mainly aimed for financial market infrastructures like clearing and settlement systems, payment systems, central depositories. But these principles are applicable to all types of financial institutions. The other two important standards are the NIST framework and the ISO standards. So the key point here is, of course, there are lots of things. You should have some cyber security plan internally in the firm. Also, like, you should identify your activities that are most vulnerable to cyber threats, and then you should have a plan, and that recovery should be within, for example, certain specific short period of time, which is usually, we call it as like 2 hours recovery target. And then, you know, there are all sorts of details in these principles that firms need to use in addressing cybersecurity. The other interesting concept is RegTech and SupTech. Regulatory technologies are the technologies that firms use for regulatory compliance. For example, things like reporting requirements, which makes life easier and more cost efficient for them. SupTech is supervisory technologies. This is the other side of the coin. And regulators use, in this case, these technologies. So, for example, we had a project on machine-readable law book, like trying to code the law into a software, and also, like, all other kinds of regulatory investments in technology to ensure compliance. Digital currencies. This is the big hot topic, of course, after the big buzz around Bitcoin and Ethereum, and this will continue to be the inevitable future, I would say. Again, digital currencies, there are a lot of discussions and issues with the legal definition, because they do not fit into the legal definition of money, and they're very different from fiat currencies, mainly in two ways. The first one is, like, they're not backed by any central bank or a government like fiat currencies, and secondly, digital currencies are they function based on trust. So as long as the other party is ready to accept your cryptocurrency as a medium of exchange, then it has a value. But it has, in reality, it has no intrinsic value. So one can say, the paper money in your pocket does not also have an intrinsic value. It's just a piece of paper. But what makes it valuable is the first thing that I mentioned, which is it is being backed by a government or a central bank, which is not the case for a cryptocurrency. So now the question comes: what if that trust breaks, and because of a cyber issue, or again, we talked about quantum computers, if they break into blockchain, or a bigger reputational cyber incident, or a big market crash, then the cryptocurrency may collapse. So that continues to be a major issue. Again, there are, as you might have heard, there are lots of issues related to anti-money laundering and terrorist financing concerns, and some of the digital currencies are being used for that. And then there are also discussions about the financial stability implications, which is a little bit, for the moment, it's a far probability, I would say. And the main reason for this is, if, for example, I think it was the end of 2017, December, when Bitcoin hit 20,000 ceiling, and considering you can mine 21 million Bitcoins today, and if you multiply that, that's quite substantial amount of money, depending on the value of the Bitcoin at that point in time. But the consideration here is, if a couple of other cryptocurrencies become sizable like Bitcoin, can they have some implication on the monetary policy, or even on the fiat currency or the FX rate? So now, for the moment, at that peak point, the total amount of cryptocurrencies in circulation was only 0.5% of the global money in circulation. We're not there yet from a financial stability perspective, but at some point this may become the issue. And also central banks, we should note that central banks are also working, some of them are working on central bank digital currencies, which can be the next very big important issue. I mean, I know that, for example, the chair of the ECB, Draghi, had made a statement earlier that no sovereign in Europe can have its own sovereign digital currency, but the direction since then has changed quite substantially. I know in China they're working on it, and there's some initiatives in Europe, like in Estonia, and even the European Central Bank is working on it together with some other global standard setters. So it will be exciting to see, and the things are changing very rapidly. It's impossible to say what is going to happen 6 months from now on in this fintech sector or technology sector. The next issue is the crypto trading platforms and exchanges. So these are secondary markets where these tokens are being traded. So we have seen some big incidents, theft in where hackers were really using the flows in the software of these some of these exchanges, and retail investors lost a substantial amount of money, and this brought a lot of attention. And as IOSCO, we have also published principles and the toolkit about crypto trading platforms and the regulatory principles that may apply to this, which are basically inspired from traditional exchanges. But there are very specific, unique issues because of the specific nature of crypto trading platforms, like the wallet issue. You know, the custodian concept is very much different, and the price formation is very much different. And cybersecurity especially is a very important key point. And sometimes we see that the owners of these exchanges have conflicts of interest, and there are all sorts of details that need to be addressed to cope with the flows of some of the existing structures in place. Another very important big hype is around stable coins, especially after Facebook's Libra. And we have discussed this a lot in IOSCO as well. You know that the Libra Foundation is expected to be or was expected to be founded in Switzerland. So there was a lot of discussion. Stable coins. So why are they such an important or a big discussion? And the main reason for that is they really address one flow of the existing cryptocurrencies, which is volatility. So Bitcoin and other, like Ethereum, Bitcoin, other cryptocurrencies are extremely volatile. But in the case of stable coins, these are stable or supposed to be stable, as they're backed by a pool of currencies, different currencies. And the functioning of the system is quite complex. But the whole objective here is to keep it stable. And then it has an enormous reach and on a global scale. For example, in the case of Facebook, if you consider like 1 billion plus Facebook users, it can really have serious implications on monetary policy, financial, and especially antitrust concerns, given the power that it gives. I'll come to that in the next bullet. But it has enormous reach potential, stable coins. So, you know, as IOSCO, what we had when we look at that stable coins, we try to understand to what extent they fit in within the IOSCO principle and the existing capital markets principles and regulation. And it's very difficult to quantify. And again, like ICOs, the analysis should be made on a case-by-case basis. But IOSCO made a public statement and published a report highlighting the risks of these also stable coins, in addition to its benefits, which is mainly, again, financial inclusion. And if you look at all these digital currencies and stable coins, one thing they they do also very important is serving those underserved people who are around 2 billion people today who do not have access to finance. We know that there are a lot of workers, for example, from Asian countries working in the Gulf region, in Europe, in all around the world, and they have to send their money to their families. And traditional payments are extremely slow and expensive. So regulators, global regulators, are also working to increase the efficiency of traditional money transfer systems. But what these currencies, digital currencies and stable coins mainly do is to fill in that gap for cross-border money transfer and remittances. So that is why there's also a lot of hype around this. But there's also a lot of antitrust concerns, which bring me to the last bullet point about big techs. So these are companies like Amazon, Amazon, Facebook, Apple, and they saw the opportunity and the gaps in the existing traditional financial services and intruding more and more into financial services sector. But this comes with a lot of questions regarding their market power, the big techs, and it proposes coming up with a strong regulation against them. We'll see where we will end up. And again, in Europe, it is also a very big issue, especially, for example, because of some of the reputational concerns some of these fintech firms had in relation to data privacy and respecting investors' data privacy. So there are big antitrust concerns, and regulators may clamp down these in the future. And even if you read the US report, it makes a lot of reference to the democratic foundations of the US and how these firms hamper that. And entrepreneurship, free entrepreneurship, and of course it also talks a little bit about their benefits. But this will continue to be a big issue. So I'll pause here. Any questions? Welcome, and happy for the upcoming discussion. Thanks very much for your patience.
Alp'cim, merhaba. Can you hear me?
Yes, I can hear you very well. How are you? Great to see you again.
You look very good with the trimmed hair.
Thanks. Because of the COVID situation, unfortunately.
That's good. Well, thank you very much for attending this conference, and your talk, I think, was very informative. And the number of listeners between the time you started and the time you ended went up by about 150. So everybody is looking into what regulators are doing, and IOSCO is the hub, basically. I'll just, to set the stage, I'll ask you two questions first. Now, because of this COVID issue, I think IOSCO headquarters in Madrid is shut down, so you're all working from homes, probably.
Right.
And you said you are in Bodrum.
Yes.
Okay. Now, I remember IOSCO meetings, all those regulators, serious faces, gray suits and everything. People are very serious. But now, when you are home, you were never like that. I mean, you were a different breed, basically. When people are at home, when you have meetings, and I think you have a board meeting today, do they get a different mindset? Do they speak differently? I mean, we have to basically understand how technology affects all of us, and in this particular case, how it affects people who regulate finance. Do they talk differently? Do they smile differently? I mean, do you see any difference between being home and being in the office as a regulator? I mean, that's my first question. Second one is, okay, let me just get the answer for this one, if you may, please.
Yeah, it's a very interesting and entertaining one indeed. We discussed this issue a lot, whether how we coped with this exceptional situation by using technology. In terms of seriousness, I think probably people are the same, but sometimes there can be difficult situations when your child is crying or your wife is passing behind you and those kinds of things. But at the end of the day, to be frank, at the beginning, we had really serious concerns about how things would function in a technological environment. And some of these new softwares really helped a lot in terms of ensuring proper communication. Of course, time zone difference is a big problem for many people. But as a conclusion, I can easily say that the outcome has been much more better than what we had thought initially. Of course, there sometimes there are technical glitches or technological issues, but they did not really. It never harmed the normal flow of business and what we do. But at the same time, I think it does not really equal to having a face-to-face meeting, because when you have a face-to-face meeting, there's also this socializing issue, and sometimes there can be some discussions or negotiations outside the meetings. In that sense, it's not exactly the same thing, but so far it is going much better than what we have accepted. And maybe people are a bit less serious. I can say that. Yeah.
Okay, so it is. I think, well, when we come to the new normal, I think we'll keep using these technologies, online meetings, on top of real face-to-face live meetings. I mean, but we've lost our chance of, asking for an excuse because of traffic now.
Oh, yeah. Oh, there are a lot of issues. I think most of the people, I have colleagues working from different parts of the world, and everyone is very happy, to be frank. The only issue is the tax regime or social security. In most of the jurisdictions, you have to spend 188 days. For example, in my case, in Spain. So that if it doesn't create tax consequences, I would be very happy with working like this. And recently, I was reading a news that the share prices of those commercial property companies are going down substantially. So this new situation and remote working will have very serious implications on the global economy as well.
Just to be clear, I mean, do you understand correctly? If it may it be that the Spanish authority will charge more taxes because you are home, or vice versa?
Well, I cannot. I'm not really. I cannot get into details because I asked to the financial advisor. but there can be. You may lose some social security related rights, basically. Okay. But when it comes to taxation, we are tax exempt. So that's the advantage.
Alp'cığım, you are in IOSCO and you are the leader of these new areas, fintech, digitalization, so on and so forth. So you are the right person to address this question. I mean, why is IOSCO and the other regulators are not moving fast enough to welcome these new technologies? Is it because our understanding of law lags behind technology? I mean, legal minds haven't caught up with technology. I mean, it's more like in most jurisdictions, of course, there are different approaches. I mean, if you look at England, for example, we have this sandboxing idea, FCA.
Yeah.
Switzerland and Estonia and a few other jurisdictions are more accommodative to new startups in this area. But some are very tough. I mean, there doesn't seem to be a harmony. And IOSCO will bring the harmony whenever it can. Why aren't they? Isn't there a stronger push for more standards, more regulations? I mean, what is the reason for that? Is it because of disagreement among different countries, or is it because we haven't understood technology fully ourselves? So how do we regulate it? What is this wait and see story?
Yeah, I think that's a very, very good, excellent question. Sometimes which we receive from the industry as well. So there are a couple of reasons to that, I would say. First of all, I think the first thing is the time angle, I would say. All of these new technologies are at their very infant stage, and it always requires some time to mature up. And as you rightly mentioned, different jurisdictions are coming up in different paces. The speed is different, and as you rightly mentioned, also some are more technology friendly and some are less technology friendly, and that also creates another problem which we call as regulatory arbitrage problem. For example, as we see with the Libra in the case of Switzerland, and there's an environment where they're defining the concept, but a lot of other regulators around the table are questioning the flows of the system. So that there's this very important time concept. So things need to mature up until we come to that point. Okay, most of the jurisdictions now have regulation in place, and that's another thing for fintech. Not each and every jurisdiction have a regulation in place, and then. That is, in one way, I think that this is not a bad thing because sometimes in IOSCO, what you see, if it's already matured up topic, like let's take something traditional, money market funds. Okay, and there are a lot of, again, different market structures and different approaches where the discussions become really very difficult. But whenever it's a fintech concept, it is always in a more liberal environment, where people, because we are more like, what we are doing is basically, is not the intention with coming up with standards, but it's more like, exchange of information, benefiting from each other's experiences. So that is also a very useful thing from one angle. But once it comes to a level which may require international standards, then definitely IOSCO may come with that. One example I can give is one of the points in my presentation was crypto trading platforms. For example, in our crypto trading platform report, we said, okay, we are not at this point, we're highlighting all these, in most of the cases, it's like this. We are highlighting the risks, but it's still early to come up with global standards. Maybe that is the answer to your question.
Actually, I mean, because being a university professor at Boğaziçi University, we have some interesting kids at the university, as you might imagine. Also from other universities, from the industry. Particularly younger people come to us often. They have an idea, typically a fintech idea these days, more than anything else. And they ask about, can we do it in Turkey or should we go someplace else? And I have difficulty answering them. So some of them go to Estonia, to Switzerland, other places where they can, especially in the area of stable coins and crypto exchanges, setting up an exchange. I mean, now in the morning we listen to Professor Ben Chanling from China, and they are doing huge business there. I don't know how much of it reflects into IOSCO work. And some people from Turkey, believe me, are going to China to start up business. And we know that Chinese regulatory approach is not very stable. I mean, they make on-the-spot decisions sometimes. Even then, they go there. And that's one problem. So I don't have an answer for the people. And because they are afraid of two things. They start up a business, and then immediately they realize they are doing something illegal. So they are scared not to be in that position. More than that, they say, okay, we'll start a technology, we'll make a development, and then a regulation comes up, and all efforts are gone to waste, basically. That's another source of concern. So I think we'll have to wait and see. But I don't think we have too much time to wait on because things are moving. So,
right.
Regulators and lawmakers have to do their best to catch up. Relate to that, Archim, you can maybe get this thing better than anybody else. For example, in Turkey, if you look last few years, when there's some increased uncertainty about exchange rates and financial markets, people very fast move into Bitcoin, for example. I mean, volume of trading in Bitcoin immediately goes up in just like in weeks, not in months. And then people who don't have access to traditional finance, or people who don't have what they can see, what they're expecting from traditional finance, go into these new fintech types of platforms, in emerging markets especially. I mean, access to finance, finance inclusion, more than that, it's basically some approach to risk or some approach to innovation, whatever. Is there any risk in your case in emerging markets? Because if it is not properly regulated, then there may be some tears at the end of the day. And that brings me to ICOs, and they now called it ITOs, initial token offerings, and it's crowdfunding, kitle fonlaması in Turkish. It was a big hype a few years ago, but most of them turned out to be either scams or innocent failures. It didn't work. Is that because of lack of regulation or because of fully understanding the business model? What do you think?
No, I agree with you. I think that this is again that was the core of my presentation. If you look at these concepts like crowdfunding or especially ICOs, the percentage of failure is enormous. And I can give you some statistics. For example, like 50% of them failed before the end of the first year. And for example, during that hype in 2018, the issuance of coins went up, I think, 11 times. And then, the failures ratios were again enormous overall. So most of the time investors lose money. But I think there's also, we should also look at the profile of the people who go there. It's usually those younger investors and millennials. I think there's this also very, how to say, generational aspect to this, where they see this technology as a holy thing. Again, without thinking, especially the potential consequences if you're not really knowledgeable about investing, first of all, and second, the way these technologies function or the offerings function. So there's a very strong, I think, role for investor education in this sense. But then again, I think for regulators, it's also challenging. I mean, you want to really, you are very much aware of the situation and the inherent risks, and you want to avoid them. But at the same time, you're receiving enormous pressure and don't want to be seen and technology unfriendly, right? That's a very, again, striking that very difficult balance becomes really very difficult. And then if something goes wrong, you are the first one to be blamed. If a crypto, so the job for regulators is really a very difficult one. And again, I think that there is this cultural thing. I see in that way. You don't see too many elderly people. They're more like, I mean, probably binary options kind of products are a bit different. There's also this gambling addiction type of situation, especially which has raised enormously during COVID-19, because our members' research shows that retail investors' screen exposure during the lockdown went up enormously. So everybody is spending time at home and gambling with these type of products. In my view, they're nothing. I mean, even if you go to, that's what I tell to my, sometimes I teach at Harvard program. And what I say to students there is always, if you go to Las Vegas, to the casino and gamble, you have more chances of winning than this retail OTC leverage products.
Yes.
Because according to Nevada Gambling Commission's rules, the casinos have to distribute 90% of the collected money back. Whereas it's in the case of binary options and these type of products, it's totally the other one. 90% they lose money. And there are statistics about this as well. Yes. So I mean, I think it's a bit human nature, the instinct, I would say, to make easy money. And we have also seen during COVID-19 people, for example, running into oil ETFs, oil exchange traded funds, about which they had no idea, and all those kinds of. So this is a similar situation, and it is basically. It is becoming more and more challenging as technology advances, but again, as I mentioned, this is the inevitable future.
Okay, we got a couple of questions for you, Alp. I'll just pass on them to you, but before that, this fintech is coming. I mean, regulators may be on time or late. It won't stop that. It will just a little bit cause hindrance. One thing which seems to be more imminent is this idea of stablecoin. It's basically a digital version of a fiat currency. I mean, like Libra was supposed to be indexed to $1, so on and so forth. And I think Libra 2.0 is in the works. And in Turkey also, there are many companies who've designed and marketed stablecoin platforms, and many central banks. And when they talk about central bank digital currencies, I think the idea of stablecoin looks easier for them. So they're all working on issuing some stablecoins. The question then becomes whether it will be issued by central banks or through the traditional banking system. That's a huge difference from the perspective of financial stability and from the nature of banking as we know it. Because payments will move out of banking for sure. That's understood. I mean, from out of banks, not banking, obviously. It will be banking, but a different type of banking. What do you think of this, the idea of stable coins? It's because it's easier to understand, and I think it's easier to regulate. Also easier for central banks, maybe, for purpose of monetary control or monetary policy implementation. What do you think of stable coins?
Yeah, I approach this concept with caution. Also, I think that's the general perception among the regulatory community. We had a recent G7 declaration about stable coins, where they said no global stable coin should be in place unless the regulatory concerns are fully addressed. Again, probably you can see this a little bit untechnology friendly. technology unfriendly, but so there's a lot of caution about this, and there are also issues about the legal implications. So when we look at, for example, it wasn't exactly Libra, but if you go to our website, you will see a stablecoin paper from IOSCO. There's a case study there, which basically mimics the structure of Libra, Facebook's Libra, and it analyzes what kind of securities regulation may apply. And if you look at that, there are really various types of regulations, from money market funds to other, disclosure related and investor protection related regulation. So it's a bit, I think the legal discussion is a bit tricky, I would say, and all those things need to be sorted out. And then the big concern from the central bank side is this can be a really, I mean, cryptocurrencies is one thing, but a stable coin like Libra can be a really serious competitor. And the reason for that is the massive scale of people using Facebook, for example, in this case.
2.5 billion people, more than 2 billion, right?
Okay, then yeah, it's 1/3 of the global population. And can you imagine the implications on the, maybe it's very small amounts, we understand, like these are, but when you sum them up, it can have really serious implications about monetary policy and even on the fiat currency. So that's why, coming to that question about who should issue that, I think that's perhaps why we see this interest from central banks. So maybe we should move quicker than the private sector to keep things under control. Yeah. I think that's probably the approach.
But if you weren't from IOSCO, I would ask the question differently, but I will not.
Okay.
But that G7 statement I read in your presentation, I can imagine who forced that statement. I mean, I personally don't agree with that about financial. If central banks are control on stable coins, so what's the problem?
Yeah.
Anyway, let's not go into that. I don't think you may want to answer. But the Chinese central bank, the Bank of China, will be doing something soon. And Facebook will be announcing a new version. Whether the regulators in the US like it or not, I don't know, because now before elections, they were very harsh on big tech. They called for Amazon and Google for Senate hearings and all those things.
Yeah, version 2 of Libra is, I think, they will launch it soon. That's the thing.
Probably they will. And that may make Facebook a bank overnight, if properly structured and properly regulated and properly legalized, actually. So we'll wait and see. I mean, we can wait and see, but regulators shouldn't wait and see, in my opinion. Try things, be brave. And I'm glad I'm not a regulator these days, because if I were, then I would say okay to everybody, startup. Alpcığım, we are running out of time, but 2 questions from the listeners. One from a student, I think. She says, do you think these new technologies in finance have to be adopted by universities, departments, economics, finance, math, and others, and other departments? What is your thoughts on the topic? Should we revise our curriculum to include these topics? We've done, actually, to some extent. But if we do that, it will be tough for you, because we'll invite you to Boğaziçi to give a course.
It would be my pleasure. So yeah, that's an interesting question. So we, as you say, we see it like all those programs even popping up on my screen all the time from some of the most famous universities, like Harvard, MIT, and Wharton, which is my school actually. So and I also like sometimes invite professors from there who are really during the last decade, I would say, very much involved in deep, especially on the technical aspects of the issue. Sometimes, they lack some of the points that we have, and sometimes we lack the points that they have, and that's why we try to also consult with them to the extent possible and invite them almost to each and every session that IOSCO holds. Yeah, that's, I think, again, it will be the inevitable future for the for education, university education as well. That's how I see that. And this may change really very, very rapidly, and all of the universities are putting in place, different programs related to fintech, and we see this, like, I mean, the scale of and the speed of this is really very amazing. Like, very recently, I was talking, before the pandemic, actually, to a very senior person from Bank of Canada, and he told me that a couple of years ago, 90% of the people we employ were traders, like say 7-8 years ago. And now 90% of the people we employ are fintech people. And there's so much demand for this type of people that also, like, sometimes, for example, I'm also responsible for IOSCO's work on compensation practices, which is very much irrelevant to fintech. But when we had a roundtable in Basel, for example, with the FSB, these traditional big banks, they were complaining about fintech companies, that they're stealing all these young talent, university graduates, from them, because they can offer really high amounts of salaries, very high salaries. And then, of course, these young people do not want to work for those boring companies, and they would really prefer to work for places like Amazon or Google, which is the most famous in terms of their working environment. So all those kinds of things. So I think, yeah, that should be definitely in the programs, and it's very important to move fast in this as well. If you can build up a reputable program, then the faster you move, I think you will have a competitive advantage.
Exactly, I fully agree with you. But there is a problem, I think, maybe not so much now than it was a few years ago. Last year or 2 years ago at Boğaziçi University, the same group organized a conference on blockchain. That was the word at the time. So my name appeared on the top as if I knew the subject. That was the assumption. It was wrong, organizer. So OECD asked me to write a paper to trigger the idea of blockchains in corporate finance and corporate governance especially. So I couldn't say no, because people assumed I knew it. I knew nothing about it. But I sat and read, a few hundred papers, academic papers, some books. I realized that at the time, because of it's being a new topic, most people didn't know anything about it, didn't have an idea of what was going on. Either they missed the finance or economics portion, or they missed technology portion. There was no marriage there. So that was a problem. I don't think it is that much at this stage today. People are learning. So we should not blame regulators very much for being slow, because including them, all of us are basically don't have a real clear idea of how things will evolve. But
That's
they
true.
will evolve. It will happen. One more question, not fintech. You are not only technology guy, you are a finance person more than anything else. For a fellow student from Boğaziçi University, Haluk says, do you think some sectors will move from China to Turkey in this process? And if so, how can Turkey leverage by establishing connections between European companies and Turkish producers vis-a-vis China? Do you see, from Madrid or Bodrum, do you see any flow like that?
No, I think that's a difficult question. I think it will all depend on the. So there are a lot of aspects to that. I read also a lot of such, I would say, scenarios. I would call them a scenario that this can happen and that can happen. But I think in order to be able to attract, first of all, fintech, you need to really have first of all, the infrastructure in place. And things like even internet, we should take this seriously. I'll give you an example. There was a lot of discussion, for example, Madrid will become, after Brexit, the financial center. But then there were a lot of comments and criticism about the technological infrastructure, especially about the internet. And then, finally, it's going to Frankfurt, for example. So it's not about, okay, let's attract capital, let's attract firms or technologies. You need to prepare the necessary infrastructure, and also there should be some kind of government backing, in my view, with a holistic approach, and it can have really the tax implications and all sorts of other kinds of things. So it's a very multidimensional answer, I would say. First of all, you should have the necessary infrastructure in place, and then the government should attract these people as well. And then still, I'm not really very much sure. But I wouldn't say, like, in terms of technology, we are coming on top of the list. Like, Asia is definitely the pioneer, and they are the champions in this. We see some efforts from different jurisdictions in Europe, like the UK, for example, being probably the most advanced, and people like Switzerland and Scandinavia, they are especially technology savvy. But in this very competitive environment, I don't think it's a very easy thing to achieve, attracting all these sectors and entrepreneurs.
Well, it's not everything in life. I'm sitting on the seaside in Bodrum or Bebek in Istanbul. You don't imagine blockchains. You imagine other things, I suppose.
Yeah, it's a very nice life.
It's all for people, human beings, citizens. I mean, eventually, if you have good people, you'll do good things. Alp'cığım, thank you very much. And we can talk for hours, but I think we are about 10 minutes beyond our scheduled time. Thank you very much. I hope I'll see you more often with conferences like this, inshallah, in the future. Inshallah.
And thank you very much for inviting me and this very nice chat. And I wish all those listeners, especially the students, all the success, in their studies. And if there is anyone who has a question or needs anything from a securities perspective or a finance perspective, as you say, in general, you can also share my contact details, and I would be more than happy to help. Okay.
Thanks very much.
Have a good day. Thanks very much.
Kendine iyi bak. Ufaklığa iyi bak.
Görüşürüz.